Are Uber and Lyft stocks good buys? Should I buy Uber and Lyft stocks? Well, before we answer that question, before we try and answer that question, those questions, you may have also heard that of late, just of recent, just a few hours ago, that California voters passed the Proposition 22 exempting Uber, Lyft, and Co. from state law to reclassify drivers. And it says here Uber and Lyft spend big, win in California vote about drivers. So let's quickly digest this piece of news. These piece of news and Uber and Lyft will be exempted from reclassifying their drivers as employees after a majority of California voters supported the ballot initiative Proposition 22. About 58.3% of the voter of the votes counted as of 12:23 a.m. U.S. Eastern Time on Wednesday, 4th of November 2020, supported the measure, according to the California State of according to the California Secretary of State website. Proposition 22 will supersede the California Appeals Court ruling and exempt ride-hailing companies from a recent state law requiring them to reclassify their drivers as employees in exchange for additional gig benefits, including a guaranteed minimum hourly wage and medical and disability coverage while on the job. Okay, so that's some positive for Uber and Lyft. So the next one says here, Uber and Lyft and all the app-based ride-hailing and delivery services spent $200 million in a winning bet to circumvent California lawmakers and the courts to preserve their business model by keeping drivers from becoming employees eligible for benefits and job protections. The titans of the so-called gig economy bankroll the most expensive ballot measure in state history, which was decided Tuesday, the 3rd of November 2020, with 58% of more than 11 million voters choosing to keep drivers classified as independent contractors able to set their own hours. Shares of both companies soared 11% to 13% before the opening bell. Yes, okay, they are not as high as that anymore. And after the huge victory, the outcome was a defeat for labor unions that had pushed for a state law aimed directly at Uber and Lyft, mandating they provide drivers with protections like minimum wage, overtime, health insurance, and reimbursement expenses. Supporters of Proposition 22 said that the outcome showed voters wanted to preserve the flexibility of the current system. Opponents said the companies had brought their own law and vowed to continue fighting for drivers' rights. San Francisco-based Uber and Lyft had threatened to pull out of California if they lost. They got additional support in the fight from DoorDash, Postmates, and Instacart, which all could have had their businesses upended if it failed. Labor-friendly Democrats in the legislature had last year passed the landmark law known as AB 5 to expand a 2018 ruling by California Supreme Court that limited businesses from classifying third-sector workers as independent contractors. The company sought an exemption, taking their fight voters with a campaign that included TV ads, mailers, and messages that appeared on their app for both customers and drivers. Okay, so you've got the hang of it all. So you can see down there, Uber closed yesterday, the 3rd of November at $35.77, and so currently now it is now up 39.83. Let's refresh it and see. This is the figure you're getting now is what is going on in the pre-market. So it's up about $4 and 30 something cents. Okay, and Yeah, there's also some other piece of news there, some disclosures from um, probably some interest related parties to the company. Um, so let's quickly digest what this issue is saying, what Uber is saying. We've digested the news. That is probably what is driving their moves in the market. Okay, so okay, their ends outcomes are expected, and the main estimate for from a 30 analyst is a miss of $0.65 with a range of negative 1.65 to a negative 0.44, an increase of 4.85% from the same period a year ago. Revenue estimate is $3.2 billion, a $612.33 million decrease from the same period a year ago. Okay, yesterday it crossed above the 50-day moving average, and it's a large cap and of $62.7 billion. 70% of the shares are held by institutions, and the total shares outstanding is about 1.7 billion shares, and it has a 10-day average volume of 16.6 million shares. And we have already digested that piece of news there that they have won the proposition 22. So technically, Uber appears to be consolidating within a longer-term downtrend. Not very good. Okay, yes, it is consolidating, and the very short terms, the 10-day and the 20-day trend lines are all rolling over. The only trend line that is very much bullish is the 50-day. The 200 day is also tired. It's according to this piece we're reading, it's a downtrend. The average directional index is below 20, indicating that shares have traded sideways recently, no doubt. However, the 200 day is still sloping bearishly lower. Comparative relative strength analysis shows that this issue is outperforming the S&P 500. Momentum for Uber is strongly bullish. The momentum is strongly bullish. The 14-period slow stochastic oscillator is rising as investors pay higher prices for shares. Okay. So this $39.80.95 we're looking at is going to be somewhere up here. So it would change the whole curve of late. That will be its highest price. Since when would I say? The last time it got any high was just before the lockdown, 11th of November, of February. So this $39.95 we are recording right now will be a new high in recent times, and that high for this year is about $41.25. So it is trying to even attempting probably to regain to reclaim that point. Okay, so the unbalanced volume indicator is bullish. The slope of the indicator is positive and suggests that buyers are presently more active than sellers. periods of how do I put it now? Okay, yes, there isn't very much to say on the volatility. It says just trends and momentum indicators can be helpful. Yeah, okay. So next one, obviously, we know is Lyft. So Lyft is probably it closed at $26.23, and currently it is up there $30.13. So we are looking at up to $4.90 increase. So that looks like not up to 10%. Yes, more than 10%. I believe definitely more than 10% increase. Yes. So we have already read that out. The same thing applies to both of them, and so we just will return to the ideas page and see what we can get out of Lyft, what we can digest from its technicals. LYFT. Okay, so its Q3 2020 earnings are expected on the 11th of November, and it says the mean estimate from 21 analysts is a miss of $0.92 with a range of 1.15 to with a range of negative 1.15 to negative 0.79, an increase of 41.47% from the same period a year ago. Revenue estimate is $488.83 million, a 466.77 million decrease from the same period a year ago. Okay. Oops, sorry, we have to update that. The chart we actually saw in the case of Uber may actually be inaccurate, not up to date. Okay, so this is actually not that much different. So it has a market is a mid cap company, and the market cap is $8.2 billion. Shares outstanding is 312.081 million, and 67% of them are held by institutions. And so technically, it's saying that it has 11.047 million shares as the average volume for the last 10 days. And trend analysis is saying that Lyft appears to be rallying within a longer-term bearish trend. Okay, no doubt about that. All the trend lines are very bearish. Seriously, I mean there isn't any ambiguity about their direction. They're all pointing downwards. They have all rolled over. They are committed to rolling down, and they are rolling down, pointing downwards. Okay, Lyft appears to be rallying within a longer-term bearish trend, driving its MACD below the signal line. However, shares remain below a declining 200-day moving average, signifying that the dominant trend remains lower. Okay, it's also lagging the S&P 500. So So even at current prices, at this current 31.1, but 31.22, it is still below the that 50-day trend line, which is at 200-day trend line, which is at 31.64. But he may breach it today. So, but these indicators, technically, not fundamentally, certain market participants will deem this a good opportunity to buy, and we'll also try and see if we can validate some of the share, percentage, or the short interests. These ones may not be that accurate. The one we have may not be that accurate, so we will try and look at that later on in this video. So it does present a good buying opportunity if all fundamentals are good. But some market participants trade mostly the technicals for very short term opportunities. Yeah. So the momentum for Lyft is strongly bullish. The 14-period slow stochastic oscillator is rising as investors pay higher prices for shares. Okay, and what could be driving the momentum also is because of what is going on technically, as we just pointed out. It is trend. It is okay. Even though it is trading above its short-term trend lines, the 20-day and the 10-day, it is trading below the medium-term and the long-term trend lines. So, okay. The unbalanced volume indicator is bearish. The slope of the indicator is negative and suggests that there is a lack of buying interest. Okay. So the Bollinger Bands are presently wider than usual as a result of greater than normal volatility that accompanied the recent price move. Events such as this may precede a pause or reversal in the near-term trend. Okay, so you might be tempted to compare these two equities. What is it called? Uber and you might be tempted to compare Uber and Lyft. So so if in doing so, we can see that what we have here is that in comparison, we're just going to compare just a few. We're just going to use a few parameters in this comparison, and they are mostly fundamental and technical parameters, and they're mostly fundamental and technical the parameters. So you can see the price of Uber Lyft is $29.59. That of Uber is okay. It has changed. That of Lyft now is $30.22. Let's update it. 30.22. So and that of Uber is 39.58. And then which is not absolutely. We can't say that they are the same. $10 is a lot of money. It's a lot. $9 and some fraction is substantial, not insignificant. So shares outstanding is sitting around 12 million for Lyft and 1.75 billion for Uber, and shares held by institutions, 67% for Lyft and 70% for Uber. And then shares short interest, we obtained these from Short Squeeze. For Lyft, it is 11.06%, and for Uber, it is 6.19%. And the average volumes are 11.04 for Lyft and is 16.625 for Uber. So in a case, assuming you were going to inject a, let's say, $10 billion, $10 $10 billion into these equities to test and find out which one will yield you more, which one will yield you more money. Well, you can clearly see that here that Lyft has about 312 million shares, and also costs less, so it is easier for this $10 billion to accumulate all of this 312 million shares, and also the market cap of yes, obviously is because of that. You can see that the market cap is, because of this small number of shares, the market cap is less than that of Uber. So because the number of shares are less, you can buy more, and by the time you buy more, by the time you are rolling over, you're turning over. So by the time you are turning them over, the price will keep on multiplying because you are adding pressure. It is pressure that drives the demand. It's the demand that drives the prices. So and if they are less, they will cost. If they are less, then they are likely to move up. As against this shares, the case of Uber, which are 1.7. So it's by far, Uber is going by this narrow method we are using. Well, I would say that Lyft is a better buy than Uber, based on this narrow, metrics we have used. So yes. Then to answer the questions we are asking, well, are they are these stocks, Uber and Lyft, good buys? Well, I can't I can't really say it. They have not really been, they're not really making money as such, and if you're just there for the fact that they are tech stocks, and that their prospects are going to be are going to improve in the future, and they are quite innovative, and they are right on the edge of things, yes, you might say, yes, I'm going to buy them. I'm going to buy Uber and they are like, so just based on that, and based on also what has happened before with other tech stocks, and these are pioneers in that space. They have revolutionized, or rather brought innovation in the ride and hailing space that was very much not tech driven as such before, not as much, even though also some people might argue that they are not so much of an innovation as such. So if you want to buy them, yes, do that for the long term, and out of any of them, it has to be Lyft. Lyft is not as old as Uber, and fundamentally and technically it has more room to go, and it's easier to roll over the shares as we indicated. So yeah, for the long run, yes, and they are also trading at lower prices relative to what they were before the pandemic and lockdown. Okay, so if you're new to this channel, subscribe, like and share. Thank you very much for watching. Thanks.